Hi everyone, today is 20th of May. Let's get started with BTC. Starting at 4 hour time frame. 4 hours. Let's see a little bit of recap from the recent move and then see what it's trying to do and then try to see what it might do next. Okay, this has been a level which is kind of needed, which I explained last week that why this is required. And in this week, yeah, in this week, there's no price action, so to speak. This is the current week. Basically, it's flat. And yesterday's one, this one was little. Thursday's drop was threatening. I would say this is another edge case. This was an edge case already last week. This week, there was an attempt. So this is where I called out. I flashed out alert, watch out alert. Of course, not risk alert. So, so everybody would pay attention in a way that it has written back to the critical support. So this support is so important from a short-term point of view. The long-term point of view, there's enough room, which we'll see at a weekly time frame. But from this is more like an immediate support and important one as well, because if it breaks below, then it kind of delays everything. It kind of because what everybody would expecting is a breakout on the upside and move some higher levels. Especially altcoins are beaten up so badly compared to Bitcoin, because Bitcoin is more resilient and holding up, but the rest of the coins, most of them except one or two coins or few coins maybe, the most of the coins have gone down badly. So I can understand that everybody's so desperate, and that's why breaking below that would delay even further, and nobody would like that. And of course, we would prefer move on the upside. Why not? So Thursday's move was really challenging, and again DXY, I would say was the main driver. And interestingly speaking, again this week as well, the stock market was more resilient, or I would say decoupled that to DXY compared to BTC, where the BTC was more sensitive and it was following DXY pretty closely. Of course, they have inverse relationship, and as I mentioned many times, that each and every day you cannot assume that it's not like a flipping switch that you turn off and light will go off. um, it's not like flipping switch, because not every day they would behave the same way. So there could be some divergence sometime. So there can be some close association, and sometimes there is like decoupling kind of a feeling or behavior. And that's all. So that's why the weekly trend is more important. So, on every day you cannot do that, and we have live example of it where stock market didn't follow DXY for a couple of weeks, I would say, and BTC is blindly following it inversely, so which is very interesting. And yeah, and uh, we'll see how long that goes. We can also say there could be some unknown factors within crypto, which could be also pushing the price down, possibly. Um, and so right now we are talking 4 hours from a technical point of view. So at this moment, one simple pattern that I see, which is very distorted one, is this one, mm, is where this kind of a recovery, where this is more like, so this kind of pattern it has formed. but it's distorted one, not very symmetrical. That's how it is. So in other words, we could expect it to move up like this, provided this support is not broken. So that's always a condition, but looks positive to me. If I look at the volume is decent. The volume has gone up with this attempt. This was a failed attempt. But nevertheless, it didn't make new low. So it tried to break above, and if you look at closely, it got rejected from this support, which is now resistance, which is very encouraging in a way that it wanted to break above. And second encouraging point to me is even if it was rejected, it didn't make new low. So it has been going sideways, which is kind of uh, frustrating in a way. But to me, this is positive because then because it means it doesn't want to give up. It means that this pattern, uh, at least this much, could complete. So in a from a longer, if I expand the thought, then this is how it is doing, where this is more like a central point. And if you talk about this pattern, then this is the center point, and this is how it is. So if you look at this one, and if I expand even more, then I would expand this pattern entirely like this, and we can say, uh, then we can do the projection now. And if this pattern holds, okay, that means if this pattern holds, sorry, if this support is held up, then uh, I would estimate, again estimation, estimate to hit this 30K level by month end. Okay, provided it doesn't break below this support. That's a precondition. It's always like that. Any pattern that you take, you must have a point of invalidation, because pattern itself doesn't offer you opportunity. Pattern offer you visibility. You can, like, it offers you projection, it offers you direction, but there is always a point of invalidation where the pattern would fail. One must know that, and it would fail if it breaks below this support 26K, right? So for now, we'll say this is what we want to see, and why not? So by month end, which is actually very coinciding with my orange box. Let's zoom out now because 4 hour is clear now, which is like a good boundary in terms of even timeline, which I would stick to. Yeah, so it looks like, so this is definitely a required level, which I don't want to touch it. So this is consolidation zone, as you could see. This is below this. This is, I would say, immediate risk. I mean, or maybe immediate support, I should say. Immediate, because people might misunderstand immediate support, because everybody would think differently. From a longer term point of view, only this matters. 22K to 23K range matters. So there's enough room before we can say this whole story is kind of ruined. So we are not there. No need to panic. So I'm not giving you. I'm not trying to give you hope here, purely based on TA, that this is frustrating but not threatening at all. Now, if I zoom out, so this whole entire a zone is like consolidation zone, where, and why we have to pay attention is because the consolidation is happening here. If the consolidation is happening here, we are absolutely comfortable. but this is like little discomfort because uh, it could go down from here and make new low from this low point of view. That's why we have to pay attention and uh, keep an eye for sure. Um, at least until it breaks about 28,500, at least up to that level, then it should sail through. So this is positive. 28,500, I would say, will give us the confidence, and about 30,100 is where we are expecting a breakout on the upside. Okay, so these are the three stepping stones. Now, so this is a bullish scenario that I talked about. If I talk about bearish scenario, in that case, it breaks, then this support is very heavy support zone, right? 24K range, very heavy support zone. And even if it touches this level, there is absolutely no concern. Even if it touches 22,700, again, it can survive. But below this is a trouble, a big trouble. Mm? And so that's just a bearish scenario for our understanding and education point of view. Uh, and there is fractal for sure, not very exactly, not exactly the same, but from my measurement point of view. So there is always one scenario, which is this leg. To me, this leg was little unwanted, even in when it happened here, as if somebody pressed the sell button by mistake. This drop was unwarranted, but it happened, and we have to accept because it was reality, so we cannot deny it. Otherwise, this would have gone up from here, actually from here. So this stage could be like this one. I'm not saying because it went down, it will go down. From my measurement point of view, this low is actually equivalent to this low, which I cannot share why, unfortunately. Thing is, it's not a photocopy. When I say fractal, it's like fractal in nature is more like photocopy at a lower scale. But in this case, we do see fractals, but it's not a photocopy or not exact replica, but good enough to indicate that what it wants to do. So it's a complex process. For an example, if you relate this one, you can relate with this one, right? If you relate this one, you can relate with this one. Then it's a different story. But then if you relate this consolidation with this one, right? Then this particular drop with this one, then it changes everything. Why it changes? Because then this has made higher, and then this is the low. So and then so after this low, so if you compare this peak with this one, you would not see fair comparison. So for example, this particular part, if you compare with this one, if you compare this part with this one, but then here it makes new high, pretty a major move compared to this one, and a drop and a drop, and then it makes new high where it doesn't make new high, a little different shape. So my point is, it gives you some idea, but it's not a photocopy. I'm just trying to make a point here. uh, so this is a new low compared to this one, which is like this is a new low compared to this one. So this could go up like this one, not necessarily, it's not the same design, but direction point of view, not the same pace as well, but design point of view. This drop was also very slow, and this was very like quicker one. So there is some differences, but from my point of view, um, I think it should head up probability wise. Yeah. Okay. So that's about the patterns. What else we could discuss? One day should not be different, I would say. And this critical line actually coincides with this trend line. If I draw um, from here, I could draw from here as well, but I would cover this one and draw lower. I actually I cannot cover this. I have to take this one. And yeah, maybe closing. If I look at the closing, yeah, if the closing gives you different point, it gives you higher point actually. This is this zone. Closing point of view, this limit is important. Candles point of view, lows point of view, you get more tolerance, like this one, which makes sense. Yeah, we'll keep it. So in that case, this is like and trend lines are not so accurate, just to clarify. Not I mean, this is just to get an idea. Trend lines are typically used to measure the angle. So, but it gives you the idea that even if it drops, it could land near this trend line, which is this critical. So then on, so in the worst case, even if it goes down, that also not going to hurt from a long-term point of view. Even if it comes down to this one, it could still go up like this. But yeah, if it breaks below, then we can say it's, I would not say doomed unless it breaks below, but not good at all. Not good at all. Then it would definitely turn negative. But that's about bearish scenario. Yeah. So now we talked about both the scenarios on lower time frame and higher time frame. I talked about the fractal as well. I talked about the support. Um, what else we could talk about? Da, 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 da. Yeah, we don't have much information, and the volume has dropped a lot. I don't know on Binance, as if Binance is not having good business. I don't know. Something is wrong. Look at the volume; it dropped significantly, as if the accounts have moved to somewhere else. As if, I don't know, crazy drops. This is very odd. Anyways, now we will go higher in time frame and a weekly for our Bitstamp. So if you look at Bitstamp on today, or in one day, the volume is not. I mean, it's not like it's even in a way, uh, not like Binance. Look at the Binance one for whole entire consolidation. It's like as if only few participants. There's nothing much is happening. Very interesting. Yeah, this was the real boost, and after that, there's no volume on Binance. Interesting. So if you look at this Bitstamp now, Bitstamp. Okay, so now you see it made this low attempt failed, made new low, so lower low with respect to this one, and it is here, and our direction is like that. This is the direction, still the direction, and it's within the green zone. We'll look at the weekly now. It's in the green zone, right? The weekly looks little weak, I would say, compared to lower time frame. Why? Because this candle was really nasty, man. This is bad one. However, this candle is stabilizing, so we don't want this candle to make a new low, to be honest. So whatever is the low from a weekly, this is purely based on candle analysis. I don't want to see below 26,374, which is roughly, let's say, 26K. In fact, that coincides with the support zone we have. So yeah, it doesn't make sense to break below this one, because then it could go lower and go for the scenario which we talked about. So far so good. So far so good, because the whole entire week it's stabilizing. So I think we'll have to see how new week opens up. If the new weeks has some more energy or momentum on the upside, that's what we're looking forward. So this remains the same. Okay. Now the big picture where this arrow is going down, I'm not going to remove this particular move. I'm not going to remove because that represents the main trend. Remember. But as soon as it breaks above this green zone, I am going to remove this one. Okay, but not yet. This is thinner one. This is thicker one. So big, and it's in the green zone. So I am still on the upside. So the recovery, this is recovery attempt, as I always say. The recovery attempt is still in progress, but it will be in trouble if it enters into warning zone, as you could see. So far so good. There's more room, but you know that you can, from this setup point of view, keep 25K in your mind. That is very important. Sometimes people assume a lot, unnecessarily. They take, I mean, their assumption kills, um, stress them out. Out, out. What I have been explaining that, oh, I cannot tell them how others should behave. Of course not. No, I'm nowhere in business of consulting or advising. But when I interact and see, I feel for them. And I believe that if they go by key supports or resistance, then the life is so simple. So I would not assume both the sides. I don't care. Of course, then one would say, if you don't assume, then how can you trade? So that's a fair point. But there is a difference. I would take a side, but my side is not blinded by or I'm not biased to my side. So that's the difference. So I have to take side, because if I want to trade, let's say, and sometimes you of course you can be on cash, that's a different story. But let's say if I'm long, because um it's progressing well and there is no need to be sidelined, let's say, that's my understanding. And why not? Because this is progressing, this is going up, not down. So why should I assume that it would go down? So that's the understanding, but with the open mind, that what is my limit? So if I'm long, what is my limit, where I should change my stand? So everybody, I'm not suggesting everybody should have the same level where they'll done, but everybody should have the level in mind that I'm long, but when I should get out. If that is not known, that's a challenge. And once you know that this is my level, and if the price is above that level, that person should not worry at all, because that's the plan. So that's my point, that once you know what is your level of exit, why to assume that that level will be broken? That's just like unreal. So people assume that they'll be stopped out. So I would not do that. If you're stopped out, fine, because that's what you have planned for it. And I mean, you are prepared for it, I would say. So nothing wrong there. If you're stopped out, you're protecting. That's why you stopped out. You're not biased that no. Some people, when they are long, they're biased. So only thing is, taking side is one thing, and being biased is another thing. So there is a subtle difference between these two. So I am long, that is my side, for example, but I'm not biased. Okay. When I say I'm not biased, means I'm not clouded. I'm not uh saying that no matter what, I'm going to be long. So my decision is driven by the key level. So if it breaks below this one, I'm not going to be long from a side point of view, let's say personally speaking, because it doesn't make sense. It enters into warning. So that's about uh, decision is driven by the levels, not on what I wish to happen. So I hope that makes clear. Mm, and it's very important. People people worry a lot for no reason. Okay, so once it breaks above and let's say crosses 33K and closes above 33K, this I will remove this because then it's unnecessary. There is one more level on the upside which I'll talk about when it reaches. We'll have one checkpoint again. It's very important level as well. But to me, closing above 33K is a big win. Okay, so we are getting close, but we have to see that happening. It has already reached and touched 31K. So one big move and 33K is not a big deal. Right. So that's we will look forward. So now you know what are the key levels and when things could go wrong, when things would go rosy, beautiful, right? And understanding of BTC is so important because as you know, even BTC sneezes, it affects everyone. So understanding BTC is super important. Now we'll look into DXY because DXY has been a culprit, or I would say the reason why BTC, at least on from a price action point of view, there are always multiple factors, but from price action point of view, DXY is the real driver. When it was consolidating, BTC also consolidated on top. If you compare both the charts, consolidated here for a couple of weeks, and when the DXY 4 weeks of 3 weeks of 4 weeks of consolidation, and then you will also see similarly 4 weeks of consolidation on the top. And when it starts going up, the BTC also started making move on the downside, especially this one. So it would not nudge, it would not move with a small move, I would say. But yeah, this was not a small move. This is a pretty good candle, pretty good candle. This is like this kind of a candle. So and this one, this current week is also not dead yet. So I have this arrow here because this is a heavy resistance zone, and we would like ideally this arrow should be from here, and the I yeah because that's a solid arrow. Um, here I should have dotted arrow indicating a possibility, red arrow, and then solid arrow indicating that highest probability of further down because it breaks down. I mean, breaks below the support. Why not? And my green arrow starts above this box. This would be solid one above this one, but so not yet. Of course, not yet. Okay, so this is far, and this is like I would say this is where the decision has to be made. So the next week is again important from DXY point of view because DXY is positive. However, it is not, the gain is not enough. When it reaches 106 kind of a level, or especially 100 breaks above 105 plus, then I would say then the real problem would start. In fact, I would assume from if this behavior continues, assumption based on the behavior, then BTC would go down towards 23, 24K level if it reaches here. And if it continues, if the DXY continues on the upside from here, then we could see breakdown, BTC breaking down. However, if this DXY, which goes down from here, then BTC would move towards 31K again. When if it breaks down below this one, then BTC should break above 33K as well. That's my uh, analysis, I would say, based on its behavior. So they are inversely proportional and different levels that I mentioned with respect to BTC. That's what I'm foreseeing. or assessing. Now, why DXY has gone up? If we think that, so we know that the DXY affected BTC, and whatever I learned that why DXY went up is a talk that is going on within Fed that there is one more hike coming up. That's why. Yes, because inflation, the core inflation is still sticky, as you know, 4.9, which is not so different than 5 compared to. So one more data would come for month of May. If that is also going to be sticky like that, then 25 basis point is coming. And that's why DXY is heading up. Now, stock market is behaving a little differently, and we have no clue why it is so. It is so bullish. Tech stock, especially, they're going up like anything. So which is in a way positive. So the market is definitely right now assuming, but the market is crazy. Remember, market would try to go up like that, but when the real day comes, when the just judgment day comes, when the Fed, Mr. Powell comes, they would not hesitate to dump and erase all the gains. They know the game, right? So of course so only assumption that I have is obvious, and what I'm learning from others, that the stock market is anticipating a pause, and it's a big assumption because they're also, that means anticipating that the inflation will cool down in the month of May. Now, I have difference in opinion. I think 25 basis point is well within the range, and there are a couple of reasons I could think of. Again, I'm not an expert in this field, but if I have to add my thoughts, I would. One thing is sticky. That means it's not trending down the core, because the Fed doesn't look for the overall CPI but the core. So point one is not enough. Second, the energy price is going up. When the energy price go up, like the natural gas has started going up. Okay, um, I'll quickly show you. The oil is looking positive. So it could go up, and if they go up, then they'll put pressure on overall CPI. Again, the core doesn't count energy, but I believe that um, it logically doesn't make sense. The core when I core means excluding energy and food. Think about it. Excluding, so the food prices, food related inflation, and energy means petrol, gasoline, that kind of inflation is not counted in core. So if the energy price goes up, the core doesn't change or unaffected in a way, as per the experts. But I don't buy that argument. I don't know why, but to me it doesn't make sense. Simple, because let's say the petrol or gasoline price goes up, and my transportation is going to go up, so I'm going to charge more to the customer. So food price will go up, but they're excluding. I get it. But my transport would price will go up. So how it would not affect other? So for example, you're you're constructing a house and you use energy. Why that is not accounted? Your energy would go up. If your electricity is produced by some natural resources and they become expensive, energy resources are expensive, how that would not affect your construction business? So I don't really get. Maybe at a high level they're talking, but in reality, to me, even if they exclude, I don't know how they cannot exclude energy, because energy is everywhere, and it's not just food and actual gasoline price at the pump station. To me, it's everywhere. If gas price go up, natural gas or oil price go up, I don't think it will. It will affect each and everything you count, you consume. So that's my understanding, and it's not about being expert in it. It's a logical thing. Any ordinary person would know that energy affects each and everything. So I don't understand and I don't buy. So to me, that's why I'm saying that if both of them are looking bullish and they go up by end of the May, they could actually end up raising the inflation. And if they do, the 25 basis point is coming. So that's kind of a factor. That's why market is little um yeah, market, I don't know. At this moment, at least stock market is not showing any sign of weakness, but yeah. So that's my in understanding. Because the energy price, let's look at the energy price quickly. We were so lucky to have lower energy price so far. We have to look at a monthly to understand. We so energy price. Look at the price. This was the price, the crude oil price in year 2008. They went during the recession. It went down, but before that it was pretty high, $140 per barrel. And then there was one more attempt, but not. Then it went down. So basically, we enjoyed low crude oil, and in reality, uh, this prices actually were unrealistic to me because it's not that it's not desirable. What I'm saying is the crude, let's say in 80s were in $20, roughly speaking, let's say. And then it started going up from 2000 onwards. And then you can see the wave. So this whole entire thing is consolidation. I'll turn on the log scale. And then you see consolidation. So this was like expanding pattern, by the way. And then it has, so this is consolidation in a way, in a descending manner. And from a big picture point of view, if you look at last 25 years of 20 years of data, then this is how it is. So this is a upper range, lower range, upper range, lower range, and then one more lower range because the pattern is expanding like this one. Yeah, it's not perfect, but it's okay. That's how it is. But you get the idea. What I'm trying to see is the lower price we enjoyed is not a normal price. This is the normal price because this was the low, this is high. So we can say it has returned back to the high, the previous high, which was kind of the trend. So all these lows were interim opportunities. So my point is the crude oil, I don't think it could go down up to this one. Unlikely. I don't think so from a chart point of view, pattern point of view. So it could stay for a while, for a few weeks or months. But point is, I don't think it will. It could go down below $60 per barrel unless we see a major recession, major recession. Then only the demand would go down. In that case, it could go down. Otherwise, it is I think heading for higher level, and it could reach to $185 per barrel in my point of view. That's because that's the next resistance that I have calculated. This I had calculated long before. Earlier we were running another channel for commodities also, and people who saw that it reacted from here. So this level was not given when it reacted, by the way. This level was given when it was here. So this is a perfect resistance, and I had called out somewhere here in 30s or 40s. So now this is a potential bottom, and then price of crude oil is likely to go up, and it could really break above and go up like this. But this is like a very bullish scenario. In that case, if everything is okay, the this yellow path would indicate the recession, mild recession scenario, where it could go up later on, like this one. And of course, the bearish scenario is where it could go down like this. So I would say this is more probable scenario for now with a solid line, in my opinion. This is dotted line unlikely, but you never know. And this is also unlikely for now. This is for a major recession. This is for major recovery, and this is for mild recession. So these are the three scenarios, and based on that, I could project a price of crude oil like that. Because when there is major recession, the manufacturing everything goes down, so the consumption goes down. That's why the crude would go down, and that's why you see major corrections. During the COVID, it corrected because the consumption would go down, factories are down, and so on and so. But if it rises, then it is going to put pressure on inflation, and then we'll have to see how it will behave, right, and affects the rest, because the Fed is not going to stop in that case. So I hope you get the idea. The mild recession and then recovery scenario is what I think we would wish to have, because that's not devastating. That's kind of acceptable. Okay, so I think I just developed a theme where we started with BTC, touch base the DXY, and then touch base the inflation, Fed's decision, driven by inflation, and inflation is driven by different factors, and one factor is energy. Of course, I didn't show you the natural gas, but that is also improving. By the way, let me hide all the drawings. It went down badly, but for last 2 months now it is recovering and it's on the upside. So the natural gas price is going up as well. Yeah. So these things add up. Monthly BTC, monthly. Yeah, monthly is, look at that. Monthly there is weakness because a monthly, if you look at it, broke below last month's low. Last month's low is 26,900. Yeah, so we would like it to recover before the month end. So monthly BTC, we would not like to close below this low. That would negative from a monthly point of view. But we have a few days left, so we don't have to assume again, right? But just a scenario point of view, that if it closes below this low, I think that's a negative sign. So the monthly has to improve. Even if it closes near 28,000, I would be more than happy. 30K is what we are expecting, but even 28,500 is good enough in my opinion. What is the opening? This is the opening price, 28,476. So that's why it makes sense. 28,500 above the opening of the prior month. That would be good enough. Okay. So I covered a lot of things today on BTC. I hope you find this useful. Feel free to ask me a question if you have. Understanding BTC is the most important. We went beyond and touched base different factors, macroeconomic factors based on. We can quickly look at bond yields as well, and they are moving up because they are expecting rate hike. So that's why they're moving up. So they know that the Fed is not going to stop. So that's why it's going up. So yeah, that's how it works. Everything is intertwined that way. Everything is related. So monthly is down, monthly is up. Here the monthly is up. So that's why, coming back to my earlier point, that's why I have not removed this one. This trend hasn't broken yet. This trend, which is going down, hasn't broken yet, right? So you can imagine. I mean, you now. I mean, I'm trying to explain my reasoning. both from a technical point of view and from a fundamental point of view. And fundamental, not crypto fundamental. Those fundamentals are trivial. Those are important but not decisive. They don't Crypto fundamental do not determine the trend. They would pump the price for a day or two or few days or maybe week, but they do not determine the direction. You need to understand the macroeconomic factors, then only. And then you blend TA. So that's what we are doing. We are not just TA, but we are blending macroeconomic factors where we look at DXY, we look at bond yields and other factors that are important like resource, like or energy prices. So we look at other factors as well. We could look at the gold as well. Why the gold is going up? Let's look at gold quickly. Why not? Yeah, commodities. The gold monthly, and you have to look at a higher time frame. Gold is near all-time high. Not kidding. This was the high year 2020. There's another attempt. This is the third attempt. This is new high. It is trying to make. See, this high around 1900, right, per ounce. This was the dollar price in year 2011. Then there was an attempt, of course, failed attempt, second attempt, failed attempt, and then this is the third one it's going for. So in a way, this is so bullish. The goal is bullish, and I see a huge cup and handle pattern here. If this is a nice cup, and this is little distorted handle, but okay, maybe it's more evident at when you look at the line chart. So this is a cup and this is a handle. It's forming. So the gold is super bullish because the gold is a kind of a reserve currency in a way, whether you accept it or not the Bitcoin. So I differ from the Bitcoin maximalist that Bitcoin is the reserve currency or the backup. I don't buy that. And I explained that many times. I can talk about again if you have question or you missed my point of view. Gold is reserve. If you look at the data that the top countries are holding golds, okay, and so unless the country go away, unless the country dissolve, that is not going to change. As long as your country, developed country I'm talking about, I'm not talking about El Salvador or any trivial country which has high inflation like Argentina or Zimbabwe. I'm not financial point, stability point of view. I'm not talking about those countries. I'm talking about developing countries or developed countries. And as long as they are continue with their status, the change, this is not going to change, okay, because they will never accept Bitcoin as currency. So they are having heavy gold reserve. You can look at, you can search it out, whether it's US, Russia, German. See, different countries have differences, but they have no difference in one thing, which is gold. I'm not promoting gold, by the way, right? I do buy occasionally. I haven't bought in last 5 years, but before that, for last 20 years, I am buying little gold, and it's not about me. Each and every Indian would buy. You know that. I mean, Indian origin or Indian would buy. That has been a tradition uh, for various reasons. So mm, when I buy, it's nothing new. I believe in buying little gold for sure because that's more tangible. I'm not saying ETF gold, but uh, this is not financial advice. This is just personal. I'm just sharing, and it's not just my opinion. So even chart is bullish. So the gold, what I was saying, the major countries would differ on different things, whether on geopolitical matters. They have one thing in common, that is gold. Whether you take Russia, UK, Germany, France, Switzerland, US, Australia, China, India, or even other Brazil and other country, they have heavy amount of gold. You look at the table, okay, and the US has the highest amount of gold, by the way. So the point is, there is a reason. It's the gold they're keeping is not for jewelries. Okay. I try to be realist based on data rather than speculative. Okay, so coming back to this one, so the things are coming back to BTC. So the BTC could so this path is nasty path. This is, we don't have to talk about unless it starts breaking below 23K. And those who have those who can trade on the downside, they don't care, to be honest. Once you understand that you can trade on both the sides, you really don't care. Okay, you really don't care. Okay, it doesn't matter whether you travel on the north or the south. Okay, so I think this I echoed a lot of things today, and I would stop here. And of course, I'm open for any question. You can disagree with me and ask counter question. I'm happy to share my opinion, right? Everybody is entitled to share their opinion, right? Ultimately, not necessarily one has to agree on someone, of course, but I think listening is very important. Listening. So from my personal, I personally listen to let's say Bitcoin maximalist, whether whether it's Adam or any other crypto maximalist. There are many. And also listen to Peter Schiff, who is gold proponent. I listen to other like Rubini, like I listen to, of course, Mohammed Alarian, who is amazing. And I listen to so many, Ray Dalio. You have to listen to so many, basically. You cannot listen to one particular person. Or if you're Ada fan, you cannot just listen to Charles, or if you're LTC believer, you just cannot listen to Charlie Lee, who sold at the top, by the way. Uh, and point is, no matter what you like, okay, don't change it. I'm not saying you change it, but point is, you expand your horizon. You don't limit yourself to. So you can have one favorite child, but it doesn't mean you ignore other. That's fine. That's a reality. If you, I mean, it's a reality of life. You have more than one kid, I'm sure there would be one special kid in your mind. You won't admit publicly or even in front of family, but it is always like that. I can say, because I have only one kid, fine. So I'm not in that controversy. But I've seen it. My parents, I argue and they don't agree. Of course they would not agree. And my grandfather, I could clearly see the difference, and everywhere around there's always a favorite child. So it's a human tendency, it's a human psychology, nothing wrong. So if you have a favorite coin, nothing wrong about it. But don't think that is the world. Just expand the vision and keep your eyes open. Look at what is happening in the forex market, the XY, the currency market. Look at what happening in the gold, which I explained, the all-time high. Look at the energy market, which is like bouncing, and how it will impact the inflation. Look, your horizon should be wider. Look at different asset classes, not just crypto and not just one particular coin. That's my uh, I would suggest that for sure, because that's not advice. So I would strongly suggest that you go and expand your horizon and listen to many, especially listen to those who are contrary. You won't believe, I listen to Peter Schiff to see his, and his some of his points are amazing. So when he talks buy gold, buy gold, buy gold, that's crazy. uh, I would say little bit 5-10% of gold in portfolio makes sense, but going for 80% gold or something like that's crazy. And going for 80% crypto is also crazy. One has to have enough crypto, enough stocks, enough gold, enough cash. So it's like the portfolio has to be have multicolor, and then you decide what size, depends on your risk appetite and goal, and your age as well, because if you are a higher age, the risk has to be lower and so on. So various factors. So the point is, knowledge of different asset class and the trend is so important. We cannot be ignorant about what is happening in the present. So But now on this channel, I share whatever I learn, so at least you get different perspective. So listen to everyone, and then you do what it makes sense to you. But having open mind is so important. Okay, so I'll end this session here. I hope you find this useful, and then we'll look into altcoins. Okay, so I'll stop the